Hi, I'm Kevin Chang, a 15-year construction veteran turned construction tech CEO. I started LinkedField. We are a remote construction staffing service. If you find this content useful, please like, comment, and share. This is the manifestation of what I've been saying the last two issues I was going to do, which is find a place to put the construction market segment, where I talk about two main things about the construction industry. One is kind of the current status, and then the other one is the forecast for the future, or like predicted future, what I think. More bad news from the Architecture Building Index, the ABI. Basically, it's saying that architects are building less and that there are overall less contracts signed. So this data is as of October 2023. It's basically saying that architects are building less and that overall there's less contracts being signed by architects. This is an indication that there's less projects entering the pipeline. Now, this has actually been happening for the last 2 to 3 kind of months, so consecutive months. So now that this is the third month that this is happening, we're kind of definitely in a downward trend. Now, remember, the ABI is a leading indicator, which we can use to forecast what's going to happen in 9 to 12 months, so about a year from now. So we'll see a significant dip around this time next year. So the fall of 2024. Now, a dip of what? Less projects in the pipeline now means there's going to be less construction project starts in a year from now. So there's going to be a dip of actual construction activity. Second index, the Dodge Momentum Index, DMI, reported that there's another down month for the construction industry, specifically the commercial in the institutional sectors. This is basically stating that there was another month in decline in the projects that are entering the pipeline. But we do still have a lot of projects that are currently in the pipeline. It's just that the growth has kind of stymied. This is a very similar index to the ABI, the Architect Building Index, that I also report on. The reason why I like to also look at this index, the D, is because it kind of helps me back check the ABI data that I also study. This is showing that there's another month of negative trend. We already had 3 previous months of negative trends backed up by the ABI numbers. Now this is forecasting, the DMI is forecasting the 4th month of decline. So again, this is signaling in the next year, we're definitely going to see at least a quarter of down construction starts. But don't panic. These are all short-term decreasing trends, okay? So because if you zoom out and you look at the long-term graph, where we're looking in years rather than months, we see that the planning of construction project is actually at an all-time historic high. So between the last few years, even before pandemic, we're doing more construction work than back then, okay? It's just that the recent months, we're seeing some decline because the last 12, 20 months, we just really had a surge with everything going on. So check out this chart. There's still a lot of construction projects to be built right now. It's more than the previous years, right? Still a lot of work. Now, if you kind of compound that with the other factors we're dealing with the market, which includes the labor shortage and the interest rate problem, you actually see that there's different regions. The different regions in this country will actually react differently to what's going on. Big cities or big markets like San Francisco, New York, or like Austin and Texas, right? Where they actually saw a lot of the surge in activity in the last 20 months. And so there's a lot of work demand in those regions. And a lot of people move there or recruit there to work there. So they have a whole bunch of talent and supply that they shored up to deal with all that demand. But now what happened? The market dropped in the last 4 months and even in the months before. We've seen that drop, right? So demand dropped, but that region had all this supply that they built up. So the people there are going to feel pinched, right? They're going to see that, they're going to feel that a little bit more because the market ebbs and flows. And right now it's on the decrease and all the supply is stuck there, not dealing with as much RFPs and different things like that. So they'll feel the squeeze more than other parts of the country. That's why you'll hear some people feeling like we're entering a recession. But then in other countries and regions where they don't have that big of a swing of up and downs and their talent stayed relatively stable, still up and down, but relatively stable, they won't feel this drop as much because they're still pretty well balanced, right? So just keep that in mind, and depending on which country you're in, you might be seeing something different. So please let me know in the comments if you're in a country that's seeing some of these points I'm pointing out, or one of these other factors that I'm not pointing out. Please share them in the comments. There's a third index that I follow. This is the Associated Builders and Contractors, the ABC Backlog and Confidence Report. This construction backlog indicator gives you a forecast of how many months of backlog that companies are tracking. It's an indication indication that there's a lot of work. Well, if you have 10 to 12 months of actual backlog on your books, then you can absolutely claim that because it's going to push you to next year. And it's also an indicator of a good market. We're at 8.5 months, right? So 8.5 is still respectable, still a lot of work, right? Just that it's slowing down. The forecast is that 8.5 months that we're seeing now as of November, that's actually still going to go down though, over the next few months. And one more thing to report on this one. This is also the first time that we've booked less than 10 months of backlog since 2018, so pre-pandemic times. So things have been good the last 4 years. We still have a lot of work we need to do. That is why we still have so much demand. We still have 500,000 construction jobs that still need to be filled. The second part of ABC report is on the Construction Confidence Index. This index gives you a 6-month forecast about what contractors are expecting in 3 kind of main pillars: the sales activity, their profits, and their staffing outlook. So a number above 50 means things are generally moving in a positive trend, improving for all 3 pillars: sales, profit margins, and staffing. They're all above 50. All these contractors across the US is expecting that they're going to be equally, if not slightly busier than usual activities, because there's still a lot of work in the pipeline that needs to be built, right? So the question is how they will feel in the next 3 to 6 months. In the comments, if you guys could let me know what challenges you're seeing. I want to answer is a few questions that I've received around the construction market. Why does lower interest rates lead to more construction projects for us? I really have to kind of break down a few construction terms. It's between interest rate versus construction starts, interest rates versus inflation rate, and then inflation rate versus spending power. December 12th and 13th, there was a Fed meeting, a federal meeting. And the Fed needed to decide if they wanted to leave the interest rate alone or change it or lower it. Turns out they actually decided to leave the interest rate alone at 5.5%. What does that mean? So first of all, I'll tell you, at least they didn't increase it, which is good. And it's been staying consistent the last several times they met to where they had an opportunity to change it. So it's been lowered, and it's been staying there for the last few months. The last time it's been last increased was in July. Now we're waiting for that number to actually come down, that 5.5, because that 5.5% actually just means it's a little bit too high for a lot of developer, private companies, for them to make the numbers work. So they don't want to start these construction. So we're seeing less construction activity. During that meeting, there are signals in the market that there will be a decrease in 2024. The question is, when will it happen in 2024? We won't know, but I have a educated guess. It probably won't happen in the early part of 2024. And if there's any decreases, it's very minor, and they probably won't do that until they actually see more indications from the industry. So private sectors like commercial and residential will continue to be slow and will feel the squeeze for at least another couple of quarters. This is because although the lower interest rates will jumpstart more projects, those projects need to be entitled and designed and then ultimately permitted before you actually see construction starting, right? So there's a sequence you need to see. All that can't happen until the interest rate falls, and it won't fall until next year. So then you're still several months after that before you'll see construction start. So what do we need for these projects to actually come back? So interest rates need to go down some. I mentioned that before. But in order to do that, the Fed needs to see that the inflation rate drops some more, okay? Because inflation currently at 3.1%. The Fed, they feel like that's still too high. They want that number to go down. And so how much lower does it need to go? You typically want to see that closer to 2%. Okay? So anywhere trending towards there is a good thing for industry. Okay? So let me know in the comments if the way I explained that was easily understood, or if you feel like it's still a little bit too complicated, let me know in the comments, and I'll try my best next time to try to. Shout out goes out to the Minneapolis branch of the Federal Bank. I reported recently on various indexes about the construction market, how they are today, and then what their forecast looks like in the next 6 to 12 months. The common theme from all of that, the market is doing okay because we have enough work in the pipeline, but the forecast looks kind of grim because there's no new projects coming in. And the main reason why there's not more projects coming in is because the interest rate is too high. Well, this Minneapolis branch of the Federal Bank reported a survey result that they conducted, and these respondents are engaged in residential, commercial, industrial, and other types of construction, including infrastructure. So it's a representation of what is really going on from the builder's perspective, the people that are in the front line. This data was released right before that meeting so they can decide what to do with that rate, right? I definitely thought it helped because it's actions like this that's going to help push the information from the front lines up to the decision makers. 50% of people said they left their jobs because they felt underappreciated. There's a survey that went out for the entire kind of market, not just construction, and it basically asked people that, put their 2 weeks notice in to kind of check all the answers that apply on why they left. And the reasons may surprise you. Topping out number one is that they felt underappreciated, then salary was too low, and they were burnt out, lack of promotion, career change, boring or drained, lack of flexibility, and conflicts with colleagues. They actually add up over 100%. And the reason why is because they could check all that apply. So if one person leaving, they can check all the reasons. Do you think if you've polled construction professionals leaving the industry, would it look like this, or do you think the top three would be different? Let me know in the comments. Here's another great remote construction work opportunity for you. This is called document control, posting RFIs, and slip sheeting. Would you like to work remotely and help construction project teams build better, make less mistakes? You do that by maintaining their drawing sets. So this week, I'd like to talk about a job opportunity where we're looking for someone with 2 to 5 years of construction experience managing construction drawings, bulletins, ASIs, change orders. You must have experience dealing with architects, subcontractors, and general contractors around drawing management. Now, if you have experience in pre-con, then that's also a huge plus. If this seems interesting to you, please check out our job board on our website and apply. Good luck. I'm very happy to be here.